I believe people think accountants are boring, always crunching numbers and speaking accounting jargon that nobody seems to really understand. We are accountants, financial planners, investment bankers, and we are proud to be part of the financial sector. As I walk through Wall Street to attend college at MCNY, I'm reminded my education will prepare me to serve the people who need financial advice. The CQA Investment Challenge has given us an opportunity to learn more about equity portfolio management. As a team, we researched, we learned, we applied stock selection methodology and portfolio management skills in a simulated environment.
Hello, my name is Caroline Ragusa, and I'm at the MBA program at Metropolitan College studying financial services.
Hi, my name is Stefan Ortiz, and I'm currently a student at MCNY, and I'm here for my MBA for financial service. And this is my current and my last year, and this video is for our stock portfolio performance. And pretty much, I'm here to show you how to do an investment portfolio.
Hi, my name is Aissatou Cissé. I am an MBA student and I'm majoring in financial services.
Hi, my name is Ria Tony and I'm an accountant by profession. I'm doing my MBA at MCNY.
The foundation of this process was based on the principle of asset allocation and diversification. We applied this to our investment portfolio. Asset allocation is the process of deciding how to distribute our wealth among different asset classes for investment purposes. Utilizing an allocation principle, we carefully constructed an investment policy statement that outlined the types of our portfolio. The investment portfolio was then designed to reflect a high risk tolerance, and investment time horizon.
We walked through the whole Bill Russell 1000 and evaluated each of the stocks and broke it down into each asset sector. The sectors we considered were the service sector, finance, corporate goods sector, technology, industrial goods, and the utility sector. We then looked at their beta, their earnings per share, dividend, market value, and percentage of return. From that, we decided to pick the best 5 from each sector and watch the performance of each stock and made changes based on the performance and percentage of loss.
I'm here to discuss the risks and returns of our portfolio performance.
We followed 5 ways to manage investment portfolio risk. First, following the trend. One way to manage investment risk is to commit in buying only the stocks which are going up. Secondly, rebalancing. Longer-term investors may try to manage the risk by periodically selling stock investment or asset classes and changing their proportions. 3. Position sizing. Another way to play defense is simply to limit your exposure to risk-prone investments. Diversification. The idea behind investment diversification is to buy asset classes or sectors that are not correlated. This simply means that if one goes up, the other probably going down. In real world, we can try stop loss orders. Placing a stop loss order is one way to limit the damage to our portfolio and force ourselves to follow a strict defensive discipline.
Now, pretty much as during our portfolio, we had actually invested into 30 stocks, and pretty much I'm going to go into details about the risk and performance. As we can see that on our performance, it is currently a strong buy performance, which that means we invest into the long term for our portfolio. Now, also just for analysis purposes, we did have a strong buy, which is continues. It shows our growth and our performance. Now, our returns was 7.41 portfolio return on our portfolio. Okay, so according to our risk executive report on our portfolio on February 1st, we constructed our risk model with 3 factors: style, industry, and market. Okay, and more specifically on our style, and factors include a midterm moderation, the size, the growth, and the exchange rate, and also the return on equity, and the volatility of the market. Now, volatility means pretty much is based on the way the market is currently investing, and if our portfolio are going coincide with the market. Now, Also, the total return of our portfolio was a 7.41, and more detail, the total factor of risk was a 62.36%. Now, on our beta, which currently is above the market, which is at 1.2. Now, our beta is really explaining on our bread and butter of our portfolio, because we have an aggressive beta due to the fact that we want our portfolio to go above the market. So now, if the market goes up, our beta is pretty much as a 1.2. Our portfolio beats the market between any other market. It's a very conservative, it's very aggressive market, and we're here to sit there to make a good investment and a risk return. Okay, so our portfolio focused more on the long term rather than the short term, and that's what made our beta even much higher than any other portfolio that's in the market. Our net profit margin was the sale of shares, earning per share, what we took into account, and the net profit margin also improvised of 20% of growth into our portfolio. So our strategy was to focus on the long term of our portfolio. And the reason why I'm explaining that our strategy was to focus on the long term, due to the fact that if when people invest for the long term, you see a better growth. Now, we only invested into our 30 stocks, and we did it for the long term. We didn't short sell as many stocks as other people do in their portfolio. We didn't change as much because we're in for the long haul. And the long haul gave us the best on our risk. We took less risk and we gained more return by being in for the long term. Now, that's our strategy, and that's our performance.
As on 11th of February 2017, our portfolio has entered with 7.42% of returns. We invested a portfolio about 30 companies. Down the time, we had to restructure the portfolio due to the performance variance. As on Jan 31st, 2017, we suffered a loss due to the current market conditions and variations. We sold 2 of the loss contributing companies, and the loss was around 5.11%. But as on February 8, 2017, we gained back to 7.41% of returns.
Thank you guys for watching our video for our CQA challenge, and we'd like to say thank you to Professor Yeager, and also thank you to MCNY Metropolitan College. We thank you, and I hope you enjoy. Thank you guys.